The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this quite exciting Wednesday, the 4th of March. So this is what we're looking at. The Dow is up 17. It was up quite a bit more earlier. Not that much. It was at 48,747. Yeah, it was actually 200 points. It's at 48,545 right now, up 40. Now, this is going to be very important. Just on let's forget about what's going on in Iran. We'll just do this purely on a technical basis. So we made a peak D top at 50,512 on the 10th of February. We came down, we made a trough A, had a bounce, dreaded H pattern failure, went to a trough B, had a bounce A minus failure, dreaded H. What is the dreaded H? Yeah, I shouldn't have said that, huh? Because now I've got to find it. Let's see if I can do that right here. Click. Yeah, there's no rush. We've got plenty of time, so let's just get there. This is the dreaded H. Price comes down from a D, E, or F, pulls back quite sharply, and then it has a bounce. It fails at a peak A or a B. There it is, peak A. It arches over, takes out the left side low. And then it tries to bounce. Well, it does bounce, and it makes another H pattern, takes out the left side low, and that's the one that went all the way down to yesterday's 47,626. Now what we're looking at is the 9-period moving average is still pink. The MACD is still very negative. The stochastic actually is a little bit better because the low that was made back there, that trough B, around about the 16th, 17th of Feb, and the low that was made yesterday, look, this is slightly higher. That is a W formation. That's not bad. That's good. The on-balance volume pulled back very sharply. So now we have a long-legged wick with a little doji, unbelievable. We opened and closed at almost the same price yesterday. In fact, you can't even see the horizontal line, right? And then today we've done the same thing so far, open and close at the same price. I don't think that's going to stay. I think we're going to try to push higher. There's just hints for that. All right. So a lot of work needs to be done before you can get the sell mode back into a buy signal. Number one. But wow, look at that weekly chart. That 9 is still over the 14. It broke, in fact, the uptrend channel line, that pink line. And lo and behold, it just starts to get so messy. I don't need to put in the inside track resistance, repellent, propellant zone, because you've got the 14-period exponential moving average there. I don't want to make it too messy. So as it stands right now, there's a nice rally, went right back to the 14-period moving average in the weekly chart. Days young, we're up 116. As I say, I think we're going to work our way towards the upper end of the range today, at least through 3 o'clock. Look at the weekly chart. This is a leg A. You cannot call it a peak A until the very last day, which is the 31st is Tuesday. 31st of March is a Tuesday. So until Tuesday, the 31st, you can't call this anything but a leg A, and then you can start calling it a peak A. If there's a much lower price at that point, you can say, yeah, you should make it. Now look at this. The S&P, should I just do this now while I'm in the middle of the show? I don't like to do it because I do it a little bit too without forethought. Let's just look at the naked chart. Look, there it is. Naked chart, 1 minute chart, peak A, peak B, double top B, leg C, and it's in leg D. And it's going to where? Towards the left side high of 68.57.75. If it snaps through that decisively, that's great. So you can just use a naked chart. You don't even need anything. Look, I don't even need candles. I can use bars. I just need to see the lowest low and the highest high. That's all. All right, so I'm not going to do anything right now because we're in a leg D. Leg Ds can be, we had a leg D in one of our positions today, something we already have. I wanted to add to it, so we added a small position, but it actually got taken out, a fairly small loss, but I'm not happy. just for that, because the other ones that I wanted, we didn't get. They kind of gapped up. I'm going to be talking about that in a moment. I think there's a little rotation just on the short term back to some of the tech sector stocks. So let me just do this right now. I want to go here. I don't want to interrupt that. Let's go back. So now the Dow's up 27. It was up a little more. Now it's up 27. I think it's improving quite a bit. But there's the S&P made a new recovery high today, and that's important. It should close above the high of yesterday, which was 6840.05. That'll be a positive. Here, the 9-period moving average is still pink. The MACD did deflect low. Usually that's not good. It takes a little while to repair that. The relative strength is still weak. The stochastic's only at 47.14. And the on-balance volume is quite weak. So anything here says, you need a lot of work to be able to get that daily chart to go to a buy signal. It's in a sell mode right now. But look at that weekly chart. It hasn't even gone to a sell signal. Still really strong. That's what I was talking to Tommy about yesterday. You might hear all the news and oh my God, I want to look at the chart. The chart says, don't get excited. You have plenty of time to get out. And if you do get out and it goes pink, the 9-period moving average goes pink, you'll be heading all the way down to the low of November, was it? Yeah, November the 28th of 66.30. You're right now at 68.47. I mean, that's a big difference, right? Holding beautifully. Weekly chart is still holding very well. Let's go to the QQQ. And the QQQ says, nice action. Sell mode in place on the 638.60 double top high of the 28th of Jan. And now look at this. You've made a leg D to the downside, probably a peak, a trough D today. You remember troughs on the downside, peaks on the upside. The MACD is actually positive. The relative strength is not bad. The on-balance volume is lousy. The stochastic's not bad at 55. And the big 9-period moving average is getting close to, trying to turn up. So as I see it right now, am I thinking this through? I am. So as I'm seeing it right now, I think that what we're looking at is there's a chance at the weekly chart improving because it was arching over, and if it had a really lousy close yesterday, wow, that wouldn't have been very good. Okay, so this is a good daily, I'd say buy signal, not yet close, but it is a nice move to the upside. Let's go to the IWM. The IWM is the Russell 2000. Look at that weekly chart. It did make a lower low, but the week is still young and it's still moving up. So that's good. Look at that monthly chart. Great. And look at the arch. So this got to a sell signal. And because it went to a pink 9-period moving average yesterday, I had to say it's a sell mode. But wow, this could flip very quickly to a buy signal, but it hasn't yet. SMHs, that's the important one. So on Friday and Monday, we were short the 3 times short the SMHs, semiconductors. We were short the Dow, but we took profits. We're out of it. I just didn't want to hold anything until I felt comfortable. With the way the VIX index is, and I'll get to that in a moment. So the SMHs is really only in a sell signal. It's not a sell mode yet. From 427.94 down to yesterday's low in the 380, 385-ish area. It's a nice rally, but it's a bit young in the day to be talking about it as a good rally. So as we go to the break, let's go to the VIX index. Volatility index sharply down from the 28.15 high down to 21.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
I vote for the VIX is at the low of the day, 21.21, very sharp. We're 7 points down from the 28.15 high of yesterday. This is really very positive. The way it seems that the market is reacting, actually, let me just show you this. I drew this in and I showed the subscribers, I showed the den this morning. Look how the 10-minute E-mini, S&P E-mini, followed the news in relation to the war. Yeah, look, 10 o'clock, a low right there, and that's 10 o'clock. It says 10:30, actually, on the 3rd, and we go all the way to that high, that peak E high at 3 o'clock. Pull back, make a cup formation, retest it perfectly. Look, to that low. This is symmetry, bar symmetry. The left side number of bars from the high to that low of that candle worked exactly. Now, there was a lower low. I chose that particular low just based on other factors, but it was a very small candle, a doji type candle, tiny doji, and everything fitted, and it worked quite well. So now look what's going on. It goes to that peak E, another doji, but then it stalls and it goes to peak F, pulls back, hits the 200-period moving average, and where are we now? Peak A, peak B, and we're in leg C in the 10-minute chart, breaking out. Isn't that really fascinating? All right. So, I didn't mean to do that. So with that said, let's move on. The Dow is now down up 231 points. S&P is up 41. This is really good action. And what it seems to be telling us is that with all the noise and all the fuss and everything and all the absolute disbelief, the market is saying that, in fact, there might be some kind of a resolution to what the market was worried about. And certainly, let's go to this right now and see if that's really happening. Gold, and I consider gold a geopolitical icon. It just money flows in countries, not just major banks, but countries, and not just funds. It really goes there seriously when there's a geopolitical situation, which of course there is now. So it went to 56.26.8, and then you pull back sharply to the 44.23 level, had a peak D. Now, a peak D under the previous peak, major peak, says, you didn't have enough strength. You're going to have to take time now to rebuild energy, and that's what it's doing. So gold's up 33. The weekly chart says you can draw in a big rectangle right there and see if you trade within that rectangle over the next month or so. Let's just put that in and see what happens. Let's go to silver. Silver right now is, I don't believe it. Yep, I do. Silver is up 80 cents. Also at a peak D, way underneath the peak E at 121.78. So it is trading at 84.21. So you can see this one will have a rectangle, but much lower down. I think that this is telling us that there's the queasiness has kind of settled a little bit, and now you're looking at a little bit more positive action in the market. Crude oil, that's still holding pretty well. It's down 48 cents, almost at the most recent high. And all I can say is that you can understand why that's still there. Anything can happen regarding crude oil. I think there's still plenty of crude oil around, but this has to do with the war itself. Now let's go on and questions. So no, I can't go to questions. Bitcoin. So I spoke about Bitcoin. I said Bitcoin, if it's able to punch right through and get not to 72,700, if it can get into the 74,000s, that's going to be a big deal because it's a leg D. Usually this tiny little PK. You need a powerful move to the upside. Look at that on the weekly chart. This is nothing. But what I did say is look at our Robinhood. Robinhood trading right now up 733. Look how it smashed through the rectangle formation. Now it's going to the larger rectangle. But this is look, the 9-period moving average needs a lot of work. It's going to take the move right to that high over there, which is at about 90, right there. To break out, but this is very good action. The MACD is good. The retro strength is improving. The stochastic's improving. On balance volume, I'm a little worried. It's just not there. It's just not there. But that's the way it is. Weekly charts needs a lot of work, but look what happened. You made a nice candle at that. Maybe if there's no new low this week of 69 below 69.22, that'll be a good sign. You can go to 90.04 in Robinhood. It just got decimated. And this is the thing I kept at the back of my mind. I kept saying, what about those magnificent stocks that were just doing fantastically into October of 2025? 153.86 down to, what did I say? It was 69? That is one heck of a move down, right? So as I see it, these are ready for some kind of a bounce. Now, is it that Robinhood is telling us that Bitcoin is going to move? Let's look at Ethereum. I had a question about that. Yeah, Ethereum is moving quite nicely, but it hasn't broken that resistance level. It has to decisively break in this rectangle formation. Remember, rectangles at the top tend to pull back underneath the support level. They don't usually break out for more than one bar. And in the downside, it's a little different, maybe 2 bars or 3 bars. But if you break the upside, in this case, 20.32, and the high today is 19.98. Very close. And it's already at a peak A. It could get to this. It's already a leg B. A gray leg B. I haven't changed the color, but it's a gray leg B because it's just repairing damage right now. It hasn't really changed the characteristic of the move to the upside, but the technicals are improved, but not that on-balance volume. That is horrible. Okay, so let's just put this together and say there's a chance that Robinhood could be moving just because it's so oversold, and then it pulls back and it comes back into the rectangle. But if, as I anticipated, it is really a harbinger of the Bitcoin move, which has gone, the grayscale Ethereum has gone from the 45, it went from 1369, early 25, up to 45.79, August of 2025. And then it comes all the way back down to the most recent low in the 17 area And it needs a bit of a bounce, surely. Okay, that's what I'm saying. So those are the levels to watch. Now, the other thing that I want to look at is the TLT. Now, that peak C I'd mentioned the other day, it has all the characteristics of a leg D, but it's a C. That's the way it is. I can't count it any other way because it made lower lows and there has to be a fresh start. So I'm watching this closely because the TBT, that's the yields, tried to rally and then it started to fail and it came down, 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 which is what you want in yields. So yields getting down to the 32 area. And I'm chuckling because I keep getting these notices from the banks. They got specials going on for all the rates, anything to do with interest rates. I don't know if they're going to be right or wrong. Doesn't matter. It looks to me like the TBT, the yield, hit 31.69 back in October, had a big bounce into the 35s, comes back and hits exactly the 31 area for that 200-period moving average to be a bounce. So that's really important, and that would say that if the bounce continues, then yields will go higher. But what if the yields come down into the break 32 support? That'll be really good for the home builders. We've got the Dow now of 304. Wow, nice move. Thank goodness we got rid of our short position yesterday, intraday for a profit. And now the S&Ps are 57. I'll be right.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
We're back. Basil, Chapman, Tiger Conditions are down 60 at 78.39 is Monster MNST, Monster Beverage. Now, I wanted yesterday, the middle part of yesterday to the close, into today, to tell me what's working and what's not working. So, in other words, I think that there's a rotation, and the rotation says, forget about the war. Just look at the rotation, and if you're in the right sector for this very moment, it should last a little longer. That's my thinking. I could be totally wrong. So have a look at this. You've got Monster that goes to a high just 4 sessions ago. It screams up to the 87.38 level. Any round numbers? Round number, no round numbers. 87.38 level. And at this moment, it says 78.30. So that's a big hit. So I'm saying just for the moment, this is out. Look, a peak D in the weekly chart, there's no way it's going back to the 87.39 level to make a 1 penny higher to continue that leg D. And a peak C, that's very bullish for the monthly chart, but it doesn't mean to say you can't have a digestive phase. So if you're looking at this, if you're looking at it as short, I'd take a tad off right here for money management, and I'd lower my stop to the candle low of, just for the moment, the candle low of the second, which was 81.01, so 81. It's at 78 right now. And I'd use a trading stop, and if it gets to the 77.20 to 76.50 area, oh, is that correct? Yes. I'd immediately start saying, okay, this is exactly on the left side. This is where it could have a bounce. And I'd take a little bit off again, and then I'd manage the chart if it keeps going down this way. Bullish, I wouldn't look at the bullish side right now. Other question came in was Amazon, AMZN. Amazon trading up today. So we've had a lot of, in fact, I was going to make a whole list of the stocks, but I didn't. I was just too busy with other things. Of the stocks that look exactly like this, had a little peak A, then a peak B, and then actually went to a C and made a D, the smallest little peak, trough, low, buy signal to a D that you can get. I mean, in this, but each stock is different, but certainly for Amazon, this is one of the tiniest ones. But it is positive because it's trying to fill a gap, and it's trying to get to the 221, 200-period moving average. And I did see some stocks. Hey, let me just check if it's still working. Shopify did nicely yesterday and today. Look at that, up 6.49 at 128.32. Best Buy. Very strong move, leg A. I think it had earnings. So I'm just going to say that as it stands right now, and why would retail be doing Target? Look at that move. I had a left side, right side price time match for Target going to next week, and the target for Target would have been this high right here, and that is 120s in the 127s. And so for the high today is 126. 00, a round number high. So why is that working? So I'm just going to say I like this action in Amazon. I'm a little disappointed it's already at a leg D. Wow. I mean, we just had a leg D in Alcoa. This tells you that there's a rotation going on through the different sectors, and it went from a new high of 68.40 down to 60.99. Now it's at 63.85. Real long, but we just had a very short-term trade which took us out, which I didn't expect it to pull back from a leg D so sharply in the leg D. After D, I was expecting it could do that. But it went to a new high in the weekly chart. So this is a rotation through all the different things. Our Procter & Gamble has done fantastically. Now it's taking a breather. Look at that. Peak effort from a 167.25 down. We've got a rotation going on. So Amazon fits this rotation just right for now. Doesn't look great, but I'd say yes, if you're looking to get in, to start, I wouldn't get too carried away, but I would start a position because the stochastic's at 80%. That's a good sign because the 9 period still has to cross positive, and then 221 will be the resistance. Hey, I'd love 221. If you got in at 216, you've got a 5-point leeway in which to raise your stop. So yes, next question came in. Let me go through these in order. Did that. Okay. Iran, one of ours that we've got from quite a bit lower down, but it's had a pretty damn good pullback. It did. Went from our entry point in the right here. Let me show you something. Oh, I didn't put it there, put it here. So this is something that we've had for a while. We're along from 2280. From August of 2025, it ran, we've taken a little bit off, ran to 74.15, comes back, breaks out, goes to 76.87. It creates this Chapman wave inside track repellent zone, comes tumbling down from the 5th of November. When I say tumbling 76.87 to the low of 33.34, gets cut in half. Right? On the 16th of December, remember the 24th of December is when the VIX index started to rally. So this went up peak B, peak A, right there, peak A right there. Peak B, peak C, peak D, had left side, right side price time match. It missed it by a point or two, by about less than a point, pulls back and then breaks out and goes to the most recent now of 63.59. And then pulls back. So this is Iran Limited. This is next generation data centers, renewable energy, GPUs. I'm just going to put 60. I think I said 64.29. I'm just putting that in. I'll change it later. Anyway, from the 64s comes tumbling down to the 35s. Wow. Rallies to a peak. This is what I mean about a peak D in a very small movement. That makes me nervous. Look, you rally and then you get to a peak D at 47. Well, going from 36.52 to 47, that's 11 points. That's a almost a 30% move, 27% move. And then it pulls back to the 200 period moving average, double bottoms right there, and now it's having a good move up. So I would do this. You're long both. So I would, at this particular, as a trade, I'd grab another at 43.20. I wouldn't get carried away. You're going to have plenty of time. This is the rectangle formation. It's the upside down one, but it has all the characteristics. Look, there's your rectangle. It goes from the low, a sharp move down, a single move down B. And then it rallies to the 47 area, pulls back, and this is your starting point right here. So that's an A, that's a B, that's a C, and then it goes to a D, and it doesn't break out. That makes me a little nervous. So I would just add a little bit as a feeler to see, am I going to add to that, or do I do a tight stop? I wouldn't have today's 42.99. You know what? I'd have a 42.23 stop. And just see where it goes. I'll be back in a moment. Basil Chapman, Dow's up 233. Good move.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. And he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Let me just see, I got this here. Iran seems to be giving us a great buy. The dips agree. This is a good time to add to IWM, given only peak B in monthly. Thanks. And then another question, are you still confident QQQ will get to 639 in 2026? Okay, so they're kind of both the same. So let's just do this. So Zeta, just before we go on, Zeta Global Holdings, I believe this is consumer data analysis, made a peak D high up in the 38 area, 39 area back in the end of 2024. Plunged down to the, what was it, like 12 or something, and then had a nice move out, leg B in the weekly chart, and then it arches over. It made a peak F in the weekly chart and pulled back very sharply from the 2490 level back in the 9th of January, right to the 200 pre-moving average, and that is like a support level. And here's another one, look, peak A, peak B, peak C, peak D. But wait a minute, it's only gone from 1453 to today's high of 1886. It's really a wonderful percentage. But when you look at the chart itself, it is, I mean, look at this, peak A, peak B, peak C, and then peak D way up there. That's what you want to see. This is kind of a cluster formation, but the cluster formation we're going to see. Now, charts themselves tell you a lot, always give me tremendous information. And not only that, they're not related to one another very often. Look at this. I've shown you charts that are just totally unrelated. So that to me says that this is very important to analyze this particular cup formation pattern and say, let it tell you, if there are others like it, how they respond over the next 4 or 5 sessions. So far, it hit the 200 period moving average and its resistance. I kind of like it. I'm putting almost together the same as Amazon. And I'm just going to say, I wouldn't add to it right now, just that's me. It's at 1841. You're in it. I wouldn't add, but I would add if by tomorrow's Thursday. That's not by Friday afternoon to Monday. If it's tootling along in the 19s, that's going to be good action. There's nothing wrong. It's just too quick for this leg D, but we'll see what happens. Okay, a couple of other questions now about IWM. Is this a good chance time to be adding? So this is what I'm going to recommend. I don't think the VIX index is telling me that this isn't all over. There's still going to be a couple of surprises over the next week or 2 or 3 or 4, who knows, in the market. This is, what do you think? This is one and done. I think if we are hearing accurately, yes, a tremendous amount is being done. But what really is telling me that this is a good time for the Russell 2000, the small caps, were out for years. The last year, this has been the small caps time, the 2000 ETF. And I'm going to suggest, if you are prepared to put a stop in, I would go today, it's at 261.61. Yesterday's low was way down here at 253.31. I mean, we're talking about 18 points, right? So you've given up a bit of that. I love to get the swings, so you've given up. So, and don't forget, the day is young. We can still do anything. This is news related. So this is what I'm going to suggest. If you're about to add add part of that position in the IWM now, be prepared. I would have a stop. So I'd go 261.53 because this is a long-term positioning, adding to a long-term position. I still see peak C and D, higher highs to come this year. I'm going to suggest that you get in here at 261.56. The stop is 258. No, that's fine. I'd have a stop just on the very short term of about 256. So there's about 6 points, that's 2%, 1.5%, something like that. Not bad. So that's the starter of a position that you're about to put in, right? So it's not the full position, but it's just like part, and then you'll add to it if we go higher. If we start to pull back, you know what you're going to have to do. Next question was, that was WK. Okay. And Capone wanted to know, what do we get to in the QQQ? And let me just do this. I'm just basing this on the Chapman methodology that says a buy signal that gets upgraded to a buy mode invariably. And when I say invariably, I don't mean 51%. I'm talking about a big percent of the time, maybe 60%, could even be 75%. I've never done the statistics. There's just too many stocks involved. And how you're going to, what you're timing daily, weekly, monthly. But I'm just saying there is every bit of evidence that says that the QQQ should go to a higher high above the 636.60 high in leg C. Now, what you don't want to see, and this is what I spoke about before, you can have a huge leg A, and there's some minor leg B, goes to peak B, pulls back, and then it just goes to C, and then it pulls back, and then it just goes to a D, and then plop, a big, big pullback. Now, the way the technicals are functioning right now, I think that the QQQ is headed for the 650s. And once we get there, because I don't know what leg that'll be. If that's leg C, that's great. If it's only a leg D, and we're actually now in the 650s, that's a lot of work, and we might have pulled back much deeper. So I'm just saying I'm expecting higher highs with a higher peak C and then a higher peak D. I'll refine it as we move along. But at this particular point, I think it's nice to know that we can get to highs. Okay, now the next thing was, look down. Yeah, so this is the question I mentioned. So three things. One was Palantir had a fabulous session yesterday, and today it's gone even higher. This is another, I wouldn't have got it because I looked at it, I thought that's the cuff formation. This is a leg. This is what you want to see. You don't want the little measly peak A and peak B. You want a peak A and then a leg B way above that. That is Palantir. See, so Palantir was on the outs from 207.52 back in 2025. Did the dreaded H failure at 147.46. Plunges down to the most recent low in the 136-ish area. Now it's at 152. This is a good move. Now we'll see how the 200-period moving average acts as either a repellent or a propellant. But this is what I want you to see. As I say, I wouldn't have bought a gap up. I would have bought a little gap, but not a big gap up like it was this morning. But I do like it. So Palantir as a trade, the next level for March, as long as it holds any pullback and doesn't break under 146, 145, that area, but in fact can go even higher than today's 154.40s, that would make this level very important. The high of the 3rd of Feb at 165.08. Yes. So those are the parameters for Palantir. Basil, per my chart, the SPY went up and tapped the 9 EMA from below and is retreating now. Any concerns? From the chart. Where is the chart? Oh, the chart that you're looking at. I'm not looking at that chart. So what time frame are you looking at? So let me just do this. I'll go to my time frames here. Okay, and you said, went to the 9 EMA. Yeah, let me just do this. Could be totally wrong. But you see this 10-minute chart at the double? We've seen how many charts on the dailies doing and monthlies doing double bottoms like this, a rising H pattern, successful. I'm suggesting to you that there's a chance that today, it's a big deal, but I think that we're going to go to a leg D above 68.86.25.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Dan, absolutely. It went right to the 14-period moving average, the spike daily. That's what you were looking at. Yeah, so this is very important. It tagged it, and it went through, tagged the pink 9-period moving average, and then hit the 14 and pull back a little bit. That's like a magnet now. So let me just wrap it up. I'm going to say that I could be totally wrong, but I'm suggesting to you that it doesn't happen all that often, that when you get a buy signal that's a buy mode, and that's kind of what we've got with the stochastic at 82 in the 10-minute chart. We should go to a leg D above today's high to get to the 86.50, starting a leg D. And that means that you've got key support now at the 68.50 68.50 to 68.40 on a short-term basis. I hope that helps you. And the one other thing that is important is that we've got a little rotation going on. I would use it to benefit yourself, and you can raise your stop. That's all you have to do. Treat it as a short-term thing that can turn into a more intermediate term, meaning going from a couple of days into a week or two. That's how I'm looking at it right now. So, and that's what we're doing. We've raised cash. I want to put that cash to work in what's showing itself to be lucid. It's just already on fire. It wants to be moving higher. And that's the way to trade this right now. And put stops. You have to put stops because it's news related. So with that said, just to show you the right here, the VIX index, VIX.X, went all the way to 28 yesterday, slumped down to, wrong chart. It's now trading at 20.77. That is really important because it's suggesting to me, that we were oversold. I was speaking to Tommy about it, and I said, this VIX is getting oversold on a short-term basis. Overbought, therefore the market must be somewhat oversold. What a move, 28.15 down to 20.79 right now. That's just allowing the market a little bit of freedom, but it's rotational freedom. Think of it that way. Okay, wrapping it up. Check out my Opening Call Daily newsletter. I will see you tomorrow. Have a great day. Stay tuned for Steve Rhodes. Should be a great show as always with Steve and all the rest of the program.